Hello and welcome to Analyst Hangout. I am Perpetua Fasome Peter. I'm excited to have you join us today, and joining me right here in the studio are Ambrose Amodio, the Chief Research Officer at Invest Data Consulting. Thank you for joining us today.
Perpetua, thank you for having me.
Yeah, as always. And I also have right here with me Charles Fakroha. He's a stockbroker and iBrand TV Senior Business Analyst. Thanks for joining us today.
Thank you for having me.
Absolutely. Well, we'll start with the capital market, of course, the equities market. The benchmark NGX All-Share Index extended its bull transition for the third successive session on increasing buying interest and expected corporate actions. The All-Share Index grew on Friday by 0.9% to settle at 52,512.48 basis points from the previous close of 0.85. In the same vein, the market capitalization closed at 28.605 trillion naira. Well, that's what we have. So let's start with you, Ambrose. What's your thought? What do you think?
For me, the market is doing what is expected of the market. Like I said, that in the last 5 years, the month of January have changed a positive trend. That Nigerian investors should understand that. You know, the idea of say, okay, when January effect, I run out of the market to pay school fees, those are not passed because market is being moved by the smart money. As of December or last month of 2022, market was still very slow, seeing a low volume. But I'll tell you, since first trading day to today, we are seeing improved volume. To say that we are seeing smart money coming back. Now these are institutional investors that understand how to position early. And also what is happening generally in the financial market also is a plus for equity market. I said it in one of the programs this morning that in the last four treasury bill or the primary market offer, we have seen that the rate and yield are going to decline. So it was 4 times. And the first one for this year coming from the bond market is saving bond, also for a decline in the yield and the rate. For me, investors that are very design nation, the service world, are saying that the shorter period you want to stay in equity to get above what you are seeing in the physical market is there. Because I said it again that the average yield in the equity market is about 6 to 7% in terms of yield, dividend yield. And in equity in the physical market for 91 days, we're talking about 2% for 91 days, talking of 182 days, 4.3%, or for a whole year, 7.3%. You can get that in a stock just in a day appreciation 10%. For me, people think there is opportunity in the equity market, and that's why I think fund flowing into that. Also, don't forget that in a financial world, what we call circular flow of fund, looking for where there is lower risk and higher return. Also, when we are taking that you are seeing a higher risk, higher return, you can take that because this fund is looking for where there's an opportunity to make money. Another was seeing decline in the physical market. Fund is not living there to equity space. So
why do you like drawing this comparison between the two?
Because most people think that the physical market for me is for the bourgeois. Why the bourgeois? For the bank that has billion to play. If I have 1 million to invest, why would I put my 1 million in physical market? Where I can turn it in equity market? Investors should understand that. If a big man that has 50 million, I'm thinking of driving your 50 million to 20 and be playing physical. But if I have 1 million to play, well, I'm going to share 500,000 to equity physical market. No, that is why you need to understand the market where you are playing so that you can take advantage of information and the cycle to make money. For me, it's a good way of seeing the market for the first 2 trading weeks green. They tell the market is heading somewhere. But what you should have in mind that, as investor or trader, you are in the market to make profits. So that means the upside market is for you to take profit. I say, don't just fall in love with up market and start holding yours. You fall in love, you forget about yourself that you are there to make money. That is why at the beginning of this year, my first class was how to set goal. For yourself in any trade you are trading. Because if you are watching any trade, set a goal, set your stop loss, your entry strategy, your strategy, and your profit target. What's with that target? Now people are meeting their target. They say, it will still go up. Then you still prepare profit until you start coming down again, start complaining. It's better you sell off now, take your profit, and also come back because it's a circle. Market will always come up and down, but don't fall in love with up market. Buy into a down market and sell into an up market.
All right, Charles, let's have your thoughts.
Well, that's interesting. Yes. The market for me has really gone beyond my expectation. Okay. Yes, but again, we expected it to go this way, looking at the past record and history. Yes, again, like you said, investors, you should have your plan. For you to get optimal benefit from your trade, your investment, you need to have your plan. Or like we say, when we're trading portfolios as young brokers, you need to plan your trade and trade your plan.
Yeah.
They normally give us that, like what he's saying, if you are going to the floor to trade and this is what the investors committee and you have agreed, and when you have this kind of percentage in terms of increase, exit the market. Don't be greedy. In fact, there are two things in the capital market that if you want to really get optimal return, remove greed and fear from your investment philosophy. Yes, what we mean greed, if you have said it is 10%, 15%, and the market has taken you to that level, what are you still doing?
Maybe just being hopeful that
exit the market, because that is what we are saying. Plan your trade and trade your plan.
So after selling tomorrow, it goes to 20. What do you
No, that is why you're not greedy. You're not being greedy.
Because you look for that greedy.
So who knows? Tomorrow it might go back.
Of course. Like he said, what we tell young brokers who have, you take them to start trading your portfolio, because it's a lot of responsibility, it's a lot of money, it's under your management. So, and that's why they don't allow it. They don't leave only one broker to do it. Exactly. You have the investment committee who will sit down and agree. However, there are times the broker can use his discretion, of course, maybe talking to them back in the office. So greed and fear are those two factors you need to remove from your investment philosophy. So for individual investors, it's very key for them. Okay. If you have set a target, that this is the return I want, it's logical. Once you get to that level, please don't exit the market. Don't be greedy.
Exactly.
And if you have set a target to also enter the market to buy, don't allow fear to also prevent you from taking that decision. Buy, so, and that is the market. So like I said, once you continue to play the market this way, and of course trying to also get knowledge, I will always emphasize that you need knowledge to navigate the financial market, because even when prices are coming down, some people can still make money in a down market. So you need to understand the dynamics, that it is a flow, yes. But for the average investors who are not interested in doing this come out, yes, I will still advise them. Yes, if you have invested in a stock that has given you a lot of returns, in terms of dividend yield, 10%, 8%, 12% for quite some time, yes, I will advise that you can increase your stake in those companies and continue to be active in the activities of those companies. So, seeing the market, yes, it's good, but traders and investors always have your plan, then trade at your plan.
I think that's quite instructive, really, talking about, having a plan and then trading your plan. Yeah. Very quickly, on a lighter note now, the CBN has released the MPC, what is it called now, schedule. Okay. And then the question is, who will chair that particular meeting?
Yeah, actually, for me, it's possible that before the date, we'll have about almost a week, more than a week to that date. It's possible that the CBN governor will come back to the town and do his...
well, there are speculations that he's in town and
that's the thing. He can oversee, then also he can also join virtual. This is technology.
Okay, that's another one.
No, but even at that, the most senior deputy can share the
Of course. I'm going that way before you mention it. And the key thing there is that it's the right to vote. That's why they have a committee to vote on their decision. Exactly. Yes, if they are 12 before now, can I say they have 11? And 11 is already a forum. They can take decision there. But the good thing is that for investors to be very careful too. And I'll tell you why I say that, equity market comes with a lot of risk. But like my colleague just said, knowledge is one of the key factors to play the market profitably at any time. That is why whether it's in a down market and up market, this cycle will continue. As far as the economy has a cycle, the market has a circle. For you to understand where the economy is in terms of the stage, and also where the market is in terms of the circle or the mode. These are the things. But going by, that every 2 months, MPC meeting will come. They know that every quarter result will come. Every month you want to see inflation data. Now, if you have this thing in your mind, let's say that price and time is what we trade in equity market and on other investment where assets. Then, if that is so, when at the end of every month, what you expect, inflation figure. You as a trader, that is why you are an investor. That is why you are alive. Before that day, you share the rumor, comment, different analysts like my colleague here, inflation likely to be another 20% off. You as a trader investor, what you do? Look at your chart and see. You factor in that expectation, whether into what you are doing, to see if it goes up, what's going to do to the market. It was going to affect the market, but when it comes down, going to part the market positively, you not trade in that direction. Now that last MPC meeting, we saw that, yes, we saw a kind of a slowdown in the hike from 150 basis points to 100. Already, we're also seeing that now that, yes, we're in a new year, we expect that this month, first month of the year, inflation figures will start coming down. But for the month of December, which is the peak of the first period, I don't expect it to come down in Nigeria. We saw it repeating itself in US, where it slowed down because they understand their environment. Also, the factor that push their inflation is different from the factor that push their own inflation. They're only because government injected funds into the economy just because of during COVID-19 that
yes.
you know, have too much money in circulation. Our own is not too much money in circulation as the causing our own inflation. Do you get me now? If that is so, then with this fuel hike we have seen in the month of December, because we're buying fuel at 350, 300, 280, in different, for that, expect that inflation will maintain that trend. And now we are seeing also that rate is declining, which is a sign that CBN also not likely to increase rate by 100% in the next estimate. Why? Because if they are asking rate up, yeah, government will also be coughing to pay to service their debt. And that is why even the deficit budget we are seeing, look at the statement they made that they will still go back and use what CBN ways and what and means to borrow. That means because if they come to the market as people are expecting that coming to the market will be a good thing for physical market, that means you want to hike rate so that people can patronize you. That means if you don't want to hike rate, you go to elsewhere. That's why I said, oh my God, to likely see rate coming down. That was to tell that we want to put the economy, or push our economy up in terms of performance. Because if you hike rate, but also slowing down your economy. But if rate is left flat or decline, that was to help you to put it, because we are still in a kind of a declining growth. That's why we are still positive. If you look at our GDP for first quarter, second quarter, third quarter, is declining.
Yes,
but still in a positive terrain. But if you really want to change dynamics now, you need to also keep your rate high, low, so that people can start doing the business. But it's good that the what we call the purchasing manager index for the last quarter of the year was positive. Yes. If you check it, that's a sign that those consumer goods companies tell you that we're going to see a better fourth quarter of support than what was before. That's why I say people are too much on the market, but they understand that the dynamics have changed. We want to see a good, better, full year result because what happened in the last quarter of the year. For me, I think we should not be afraid of MPC meeting or inflation figures. Okay. I believe that market was to do what it's doing now till a day to election or to the election before people start being careful, take profit and what they are talking about. If the election comes successfully, the trend was rebound.
All right, that's interesting. You want to chip in something before?
Yes, I agree that the economy is going to kickstart. Okay. I don't see CBN looking at what is going on to see how they want to increase the rate. And of course, we've seen the positive from the stock market, and we're seeing some little positive here and there. So I believe that rates will actually come down. And once that happens, that means you will see more and more businesses that were having issues before, or especially the SMEs. Yes, election is just barely a month or two.
No, a month plus, not
a month plus, okay? Yes, like I said, you will see some little uncertainty here and there, especially very close to the election. But I think we've been assured that no matter what the security situation is, election will go on. And once that election is done, I am assuring you, a week after, once a clear leader emerges, just like what happened in 2015, I think it was on a Monday that a clear leader emerged. I was on my workstation, and that was the first time in my career as a trader I saw the all-share index rose almost 8%. That was even before that 2020 November 12 increase. That because a sitting president has been defeated, congratulating the incoming president. The all-share index, the market reacted because that's the first time. So I've seen the certain situation like this, though it might not be too glaring, it might be too clear in this one, but once a clear leader emerges, you will see that, in fact, most of the FDIs will start coming immediately.
Just to add to what you just said, it's just very, very correct, whoever that might, if you look at Obi, Atiku, and Tinubu, these are people that are pro-market. For me, anyone that comes on board, market will respond positively to that. But another thing that we should also understand that why our market has changed, people don't understand, is that we have a change of structure in the market totally. Post COVID-19, the foreign investors have stepped down in our market. Having the local players that understand the terrain of the terrain of what our economy, our political, environment, and they now invest with confidence. We were to be any foreign investor. Now the election is coming closer. They will just be saying and say, we don't know the outcome of election. Let's try for hold our money. But you and I will understand that will come, market will be good. This one come, market will be good. For that, we're all waiting to see who will come. for that, see, that's change in structure in the market also is a plus for our market. That even the election, see confidence in the market. They don't know why there's confidence because it's not dominated by what local players. If we have foreign investors having about 58% of our market will be shaking. But today they have about less than 13% of the market. Says that this market is in the hands of. But before, after the meltdown in 2008. They came into this market massively and took over our market because they know that we were fearful when we saw that meltdown. The opportunity for them to come in and that's why you see Dangote moving from around 18 naira to what they priced it then, because this one they came and take position. But now the thing is changing because they know that we are coming back fully now gradually. But I believe that the SEC and the NSC are going to do more education. About 200 million Nigerians, I have less than 10 million playing the market. If we have 20 million, 40 million playing the market, we don't need foreign investors in Nigeria. That we need them because it's a way of supporting us. Because if we are the one playing it, we understand our environment. You can, that's why anywhere see a US trader trading US market, you understand the terrain, the policy, not all. That means any foreign investor in that market has to be very careful because the dynamics of that economy is different from where we are coming from. But we understand the dynamics of our market. That's why we can play with confidence at any time.